So Evergrande went under, as I predicted roughly about a week ago. That was somewhat of a controversial statement at the time. Some people were saying that China might bail them out still, or that it wasn't a certainty that they would go under. It does appear now that they are going to go bankrupt and that they weren't actually too big to fail, which, as a side note, that is somewhat ironic that China is actually allowing business the size of Evergrande to go under, just given the track record of China being a communist economy, whereas in the United States, that's supposed to be a free market economy, we actually bail out far more businesses than they ever would even imagine. So, as a side note, I'm somewhat disappointed with the state of the supposed free market in the United States, but also to sort of show how this isn't in fact a free market. The stock market has rallied immensely in the last several days, specifically after the Federal Reserve essentially confirmed that they were not going to tighten or taper in any way, that they would just essentially continue this 120 billion in monthly or weekly asset purchases or whatever they're doing at this point. It's insane the level of influence that the Federal Reserve has in the market at this point, and we almost have entered into a state of modern monetary theory, or MMT, at this point. It's sort of undeniable. Up until now, I would have been a bit more hesitant to say that, it's officially an MMT economy, that's how this functions at this point. But I would almost go on a track record as saying that right now, just with how involved the Fed is in propping up this, continually expanding everything bubble. It continues to get more and more expanded in terms of valuations, but also the fundamentals of the economy underneath the supposed stock market and equity market that's supposed to reflect that economy. The underlying economy continues to get worse and worse. So it's almost like a bifurcation. One continues to get more overvalued and the other continues to get even weaker and weaker. So, the past few days have just confirmed that in my mind, that COVID, in a way, has been almost the best thing that has ever happened to Wall Street. And I say that because, Wall Street, since the COVID bailouts and since the just nonstop quantitative easing and asset purchases on the part of the Fed and the central banks around the world, by the way, but especially just looking at the Fed, it has been, everything that Wall Street could have ever wanted in terms of, free money, extremely cheap money to borrow, as the federal funds rate has been basically 0%, so you can basically borrow as much money as you want, paying extremely low interest on that debt. And, in a way, it's almost been the best thing to ever happen to Wall Street. While at the same time, it's been extremely devastating to Main Street and to, small businesses across the board, which have gone completely bankrupt in some cases and just barely getting by in other cases. And labor shortages have been a huge issue the last, 4+ months, with, dramatic rise in wages, and still companies are unable to find people willing to, serve tables or, open fast food restaurants, to where even at this point you still have restaurants that are shuttered, not because of COVID shutdowns, but because of just, nobody's available to work, supposedly. And so in a way, it is the best thing that has ever happened to Wall Street and the worst thing that has ever happened to Main Street. So at this point, I would say that in a way, you could almost say that the economy and the stock market are almost inverses of each other, in that the economy has gotten worse. It's continued to get worse in terms of unemployment and in terms of small business failures. It's continued to get worse and worse. While in terms of the stock market, it's continued to have more and more free money and rates kept extremely low over the last 18 months. And obviously at some point this is going to come to a conundrum where it will have to revert back to the mean. That is what history would suggest, and more so history would insist that this would happen. Warren Buffett is famous as saying that, or if some system like this actually worked, it would have been discovered roughly 2,000 years ago, or even before then. The Roman Empire, in other words, would have never fallen if such a system as MMT could actually work. If you could actually go and print money and everything would be okay forever, it would have been discovered thousands of years ago. People and human nature has not changed at all, roughly. Technology, sure, that has changed significantly, but human nature, the laziness, the tendency towards laziness on the part of people has not changed at all. So I would definitely not put any sort of long-term confidence in this ability for the economy and the stock market to continue to be almost inverses of each other. At some point, I would say that this has to revert back to the mean, that the stock market either has to correct massively or the economy has to improve massively. Likely it's more of a stock market reverting dramatically back to where the economy actually is at some point in the future. Now, obviously, I do not know when that will be. Obviously, we saw in the last week that as of right now, Evergrande has not been enough to wake up the stock market. It has not been enough because, if anything, Evergrande has just confirmed that the Fed is willing to backstop the equity market at all costs, pretty much. So at this point, I would almost say that it kind of has to be some sort of a black swan event of just a magnitude that is far greater than Evergrande. And Evergrande was a black swan event, but it was, only $305 billion in total debt, which, $305 billion would have been an immense, black swan event 10 years ago, back in 2008. That was more than Lehman Brothers by 5 times. But at this point, when we're in such an economy that is almost borderline MMT of just printing money, ad nauseum, I would almost say that it would take something on the order of trillions at this point, of a black swan event type Evergrande collapse, to send the stock market, reverting back to where the economy actually is. And, I don't know what that could be. It could be a cryptocurrency, massive crackdown, kind of what China is already doing. Cryptos make up, roughly 2 trillion in market cap, so maybe it has to do with something involving a massive crypto crackdown, or something on the order of several $trillion, not in the hundreds of billions of dollars, where it's just easily printable, in other words, by the Federal Reserve or by the central bank of whatever country it ends up being. And I would almost say that it has to be much larger than that at this point, or it simply could be eventually this bubble just collapsing under its own weight at some point in the future, when inflation does actually begin to pick up steam, which it has come with an immense lag, much longer than anybody could have predicted before. But once inflation kind of starts getting out of control, at that point the Fed's hands would essentially be tied and the bubble would have to implode. So these are just my thoughts regarding kind of the inability of the markets to see what is obvious at this point. And in a way, I don't really blame the market, because if the Fed's constantly saying that they're going to backstop everything, what else is the market really going to do? But on the other hand, I do think that eventually it will all come to a head, but I really don't have any clue as to when that could be. How you hedge yourself for any sort of event like this is totally up to you, but if you enjoy hearing content like this, or if you have any questions regarding what I just talked about, feel free to put them down in the comments section below, and I hope to see you again at some point in the future.